Well, hello and welcome everybody to the Fast 5, a new initiative from SMSF, insight into some of the best financial advisors in the community, along with the opportunity to ask questions about current issues. Today, we're being joined by Liam Shorte, who is the self-managed super specialist from Varante Financial Planning. Before we start, there's a series of slides being shown on screen right now. One of them was a disclaimer slide, so I hope you all saw that. There it is right now. It's basically the Bart Simpson excuse. It wasn't me. I didn't do it. Nobody saw me do it. But this is just a general sort of session. So there's a disclaimer. It's not personal advice. And away we go. So welcome, Liam, and thank you very much for joining us today.
Great to join you and looking forward to taking some questions.
So just quickly, the way it works is just a bit of a background on how you got into the sector. So firstly, how did you get involved in the SMSF sector?
Okay, well, as you might guess, I'm Irish. So I married an Aussie nurse while working in the Middle East, came back to Australia for 6 months in 2001 and decided not to leave. So I started from scratch in a financial planning and accounting office, doing the power planning, and I saw the benefits for small business people and for people who had complex estate planning issues with using an SMSF. So I really, once I got my license, I specialized in that area, and it's gone from there.
Okay, so in your experience, what's the most valuable piece of advice you think you've provided?
For SMSF trustees, it's to make sure your advisors are working as a team. So to have your accountant liaising with your financial planner and also bringing in the estate planner, the solicitor, because they've all got their own ideas and their biases from their background. So if you can't get them working as a team, you may have conflicting advice and end up not achieving what you want to achieve. So having your advice team work together for your benefit it can make huge differences to the outcomes.
And right now, what is the biggest issue that trustees are currently struggling with?
I think there's a couple of things happening at the moment. There's a lot of changes in terms of, after the 1st of July, people over 65 will be able to, or 67 will be able to do more contributions and re-contributions. It's understanding the complexity of how to do the paperwork and doing those also with the T-bar requirements. So, a lot of trustees don't understand what the reporting requirements to the ATO. So they may go and do things themselves, but not tell their accountant until the end of the year and find that they've breached the rules. So it's very much a case of they've got to now get into the routine of being in touch with their accountant or administrator every 3 months if they're making any changes. So that old idea of just talking to them at the end of the year and getting it all done with a shoebox of reports, it's got to change. And probably one of the bear bugs then is for financial planners and accountants, we need to be able to have one source of truth for information. So at the moment, accountants are using BGL or Supermate or Class. Financial planners are using Xplan or Coin, and they're still struggling to data feed between them. So trustees are not getting the same answer from the different advisors. So we need that source of truth. And for financial planners, we can't even access the client's details on their total super balances or transfer balance caps on the ATO portal. So we're flying blind in a lot of cases, or asking trustees to try and find information for us.
Yeah, that's obviously a situation that continues, and it's less than ideal for both trustees and practitioners alike. Liam, if you could change one thing or something about the SMSF sector, what would it be?
Look, for me, it would be a pro forma trustee company constitution, binding death nominations, so the paperwork for running a fund. Because I'm picking up funds at the moment that haven't been updated for 12 or 14 years. But in the meantime, they've started account-based pensions and transition to retirement pensions, which are not even allowed in their older deeds. You've got different sellers out there trying to promote different parts of deeds and different strategies that their deed is special for. I would like to see one standardized deed approved by the ATO that we can say to clients, like, this will cover off on any strategy you're looking at to do. If you want to go beyond that to do, you know, an SMSF will or include extra stuff, that's at your risk. But at least give them the certainty that the basic deed they have is going to suit most of the strategies that 99% of people are going to use.
And if you had a crystal ball, could you please provide us with a bold prediction for the coming year?
We've already seen that, you know, for the last 5 years, the cash and fixed interest side of the portfolio, which a lot of self-managed super fund trustees just use high interest accounts and term deposits, it's paid nothing for close to 5 years. In the last 2 weeks, we've seen the highest term deposit rate rise from 1.2% to 3.1% from Judo Bank in just 1 week. So now we can finally start earning some money on the defensive side of the portfolio. Yeah. So my prediction is, stop being loyal to your current bank. If you're just sticking with the one bank, you need to start shopping around, because, as I said, at the moment, I'm seeing a 1 year term deposit from ANZ at 1.4%, Judo at 3.1%. If you've got a couple of 100,000, that's a lot of difference. And also, we're going to find out as inflation rises, the equity side of the portfolio is going to struggle. Companies are going to have higher costs, higher wages, their fuel costs, everything is rising. So you've got to have every part of your portfolio delivering for you. So if you can be getting the cash and fixed interest side to be delivering 2.5 to 3.5, that takes a lot of pressure off the shares and property.
Oh, that's great. Well, after asking you the Fast 5 questions, we're going to open the question or the chat forum up to Facebook users right now. So if you do have any questions, please go onto Facebook and ask Liam anything you like. I'm sure he'll be only too willing to answer any of your queries. And while we're waiting for that, I thought I'd just continue the discussion, Liam. You mentioned that the most valuable piece of advice would be to make sure that trustees have all of their advisors talking to each other and in collaboration with each other. How easy or difficult is that to do? Because we all know that there's obviously an element of paranoia of one practitioner poaching a client. Or more to the point, how willing are practitioners to do that? And is it up to the trustee to really crack the whip and make sure it happens?
Look, for the advisors, it's a matter of leaving your ego outside the door and understanding you can't be a master of everything. So, you know, for example, something like a small business concessions, where, you know, you've got somebody who's built up all their wealth in their business, they're selling their business, they want to get ready for retirement. A lot of advisors they're strong on non-concessional contributions and concessional contributions, but they forget about the small business concessions. So it's really important to bring the accountant in at that stage, make sure we understand how much can be got into super using those concessions, and then making sure if we're moving in a couple of $1 million into super, that the client then reviews their estate planning and make sure that the lawyer understands that the bulk of their wealth is not going to be in their actual estate, it's going to be through their superannuation fund. So the trustee needs to, one, read up and understand what's involved and ask questions. There is no silly question when it comes to your superannuation. So you've got to be on top of it, and don't rely on just one source of, you know, for advice. Use that team and just ask them to work together. Introduce them. There's so many trustees who don't even tell their advisor who their accountant is. And you know, and another point of that, if you're going into a complex strategy, you know, you've got to be talking to the auditor. You've got to be getting feedback from the auditor if it's complex strategy before you do something, rather than them having to do a contravention report at the end of the year if it's the first time they hear about it. So trustees need to now be sort of the director as far as, you know, bringing in specialists wherever they need them, and making sure that they work together.
Yeah, of course. It seems very sensible, but obviously are not that logical out there in the real world. You also mentioned in our chat the importance of having an up-to-date trust deed. And I suppose now would be a great time to review it because there's so much legislative change coming through on the 1st of July, which is really right upon us. As a rule of thumb, how often would you suggest trustees should revisit their trust deed and maybe make sure that it's up to date with the latest strategies and investment asset classes, I suppose, that they can have access to?
Look, the main thing is most trust deeds now are inclusive, and they allow most things rather than the original trustees. A lot of them excluded certain assets, so it has changed to being more of a you can do it unless, and that's where we prefer it. But really, after every budget, I think everyone should just look at their trust deed or ask their advisors, do they need to review it? And they should be updating it about every 3 to 4 years. Just to make sure they capture the changes. Some of the deed providers now provide an annual update service, which if you divide it by 3, it ends up being the exact same cost of having a sort of a deed upgraded every 3 years. Okay. So yes, review it every year that there's a budget changes, and then update it every 3 to 4 years.
Okay. Now we have a few questions that have been submitted. So here we go, Liam. This is from the public. Liam, are you getting lots of inquiries regarding investing in crypto through SMSF? Very topical at the moment.
Yeah. Look, over the last couple of years, I've got a lot of inquiries about crypto. What I'm finding is the majority of them are just people just asking, is it something I should be considering? Is it something I can look into? The people I see that are actually successful with crypto, they tend to come from an IT background. They're already using Block Ledger or adapting Block Ledger in their own, the environment they're working in, so they can see the value of it and they can see how it works, and they understand the complexities of a hot wallet or a cold wallet, and so they seem to be the ones who are fairly successful at it. It's one of those things where I say to people, if you're going to invest in it, try it in your own name first. Make the mistakes with your own personal money, not with your retirement savings. And if you make a profit in the first attempt, treat that as luck, not as you being a guru and a genius and suddenly putting a lot of money into crypto. It's still in its infancy. It's still as we can see in the last year, Bitcoin has dropped over 50%. There are now problems with some of the coins that were stable coins, which were pegged to the US dollar, that have just absolutely crashed in the last week. And they're taking most of the market down with them. So it's still the Wild West. It's one of those areas that dip your feet into, and if you lose your money, a small amount, treat it as a lesson. But for SMSF, the really important thing is the compliance. 1, check your deed allows it. 2, you must adapt your self-managed super fund investment strategy to allow you to invest in that area and have it signed off by all trustees. 3, make sure you use an exchange where you buy and sell the crypto. Make sure it's one that facilitates Australian SMSFs and reporting for SMSFs. So that means instead of the American end of calendar year reporting, we need 30th of June reports. So the auditors are not going, they want to see the values on the 30th of June. And they also want to see transactions that show the Australian dollar amount, the units of the coin you're going into, and any expenses and brokerage that's involved in that. And so that's why I say try and use one of the exchanges that is located in Australia that really understands what's required from an SMSF. And it'll be very clear on the website if they deal with SMSFs or not.
I think that's a very great piece of advice that you provided, that test it out first before you use your SMSF money. How long, and you did mention that if you get a win, treat that as a bit of a fluke to start with. How long should that test period go for before people can be really confident to say that, no, I think this is okay. I can start introducing my SMSF to cryptocurrency?
Well, from what I've seen over the last 3 or 4 years of crypto, you need to be doing it for at least a year to go through a few cycles. Well, the worst thing with any investment is selling out at its low if there is potential for it for the future. The problem with a lot of these crypto coins is the amount of influencers out there that are promoting and pushing and talking about, dodgy coin or, all the other old coins and saying these are the next best thing.
Yeah.
No, none of those are licensed. None of those people are licensed to do any of this. So it's basically just like any other advertisement you see on the internet, treat it with a pinch of salt. You've got to do your own research. And if you're going to invest, start off with something that's in the mainstream, I call it mainstream, but Bitcoin, Ethereum, just try and stick to the big ones to start with. And certainly in your SMSF, I would not be going down into the other coins. There's now 9,000 coins out there. It's ridiculous. And you talk about the next move then is the non-fungible tokens, and it's just ridiculous. So really start off slow, test it in your own name. If you're going to move it into the super fund, first sit down with your administrator and see whether it's allowed. Your advisor will not be able to advise on it. 99% of advisors in Australia will not be able to advise on Bitcoin or any other crypto because the professional indemnity insurance will just not cover it off. So don't expect your advisor, or don't be disappointed that your advisor says, what I say to clients is, I can't advise you on it, but what I can do is make sure you're compliant for your SMSF. Make sure that you set it up properly, you hold it in the right name, you hold it in the right wallet, and that you have the reporting for the accountant and auditor at the end of the year. But as far as whether you should buy it or not, it's beyond me.
Yeah, no, fair enough. And I don't think that you're Robinson Crusoe and having that attitude.
And I'll give you one example. I started my own crypto account to make sure I understood what the process was to start it and to run it. I put $5,000 in there for my SMSF. 6 months later, I took it back out because after doing all my research, I just could not justify putting my retirement savings at risk for it. So now I'm starting to look at it from my own personal money and maybe dipping in now that the market has dropped so much.
Very smart, very smart. The next question that's come in is actually about advice. This is a bit strange, but probably allows you to really describe what the value of advice is to SMSF trustees. The question is, what is your advice for trustees who try to manage their SMSF with no advice?
Well, then they've got to read and research everything, because again, we talk about social media or Google delivering stuff that you search about first, and then you'll get all you'll get is detail about that. So it's really important to something like the SMSF Association Connect, Trustee Connect site, where a source of truth for information. The ATO, just something as simple as the 24 videos the ATO have on running a super fund. They're all 2 or 3 minutes long, really good to give you a background, and they have links to more information then if you need them. But if you're going to run it as a trustee and try and do it all yourself, it's a case of be careful of what you don't know, because a lot of these strategies are complex. And as I said, it may be something you say, oh, look, I can do a recontribution strategy myself. It's just taking the money out and putting it back in. And then you don't realize that you've got to do the T-bar reporting to the ATO. So it's making sure that you understand the job that would be done. If you had a professional, what's the job each one of them would do in order to make sure that your strategy went through okay. And I do find that the smartest trustees that really are involved in their own fund, they know when to bring in a professional and when to seek advice.
Now, another question from the audience, Liam, that is very dear to my heart is around director IDs. Just a simple question about how much support can I get from my advisor to help me through the director ID process?
Okay, the whole idea of a director ID process is that it's driven by the actual director themselves, the trustee themselves. So they have to download the MyGov ID themselves. They have to apply. The advisor can sit there and help you, but they can't actually do it for you. The accountant can't do it for you. The lawyer can't do it for you. It's something that, because the MyGov ID is on your phone, it has to be something that you're actually controlling. So once you've actually applied for your MyGov ID, and yes, your accountant or financial advisor will help you with that. But then once you move on to actually applying for the director's ID itself, you'll need to have the list of information that you need, and a lot of it's just proving your identity. But for someone like myself, I'm an immigrant, my correct name is William Shorte. So, but a lot of my documentation Liam is the Irish William. So I've been known as Liam my whole life. And my first employer when I came here to Australia put my TFN in as Liam Shorte. Oh, so I fixed this years ago, but I'm coming across loads of clients, especially ones who started off as a an apprentice trainee or something like that, and then build their own business and did really well. There are mistakes on their original, either ATO information or the driver's license. A lot of women, for example, just a simple Anne. I've seen so many ANNEs that on their driver's license is missing the E, and it's just ANN. And they've just never bothered to fix it because it wasn't an issue. But then when you go into a system that this is a yes or no system, you either tick the box or not. If the E is not on the end of the driver's license, it just gets rejected. So you've got to make sure all your information is correct. So yeah, the advisors can help you, but they can't actually do it for you. You've got to actually push the process yourself.
Just to follow up to that, Liam, do you think that it's understood that your advisors, be it your lawyer or your financial advisor or your accountant, can actually help you? I think some of the messaging has sort of intimated that you're on your own.
Yeah,
you go and get it yourself.
Yeah, look, and I think that was the way it came out from the ATO originally was, it was telling advisors and accountants, you're not the ones that are allowed to do this. You're not allowed to do it for your client. But the first thing I did was I wrote a blog and I explained to clients, here are the steps involved in getting your MyGov ID. Here are the steps and the information you'll need to get your director's ID. Try it. If you've got any problems at your next review meeting, come in and we'll do it. Bring all the information in and I'll walk you through it. But we've got to do it on their phone. We've got to do it, using their information. So things like, yes, the advisor can help, but you shouldn't be sharing passwords. You shouldn't be sharing information. So let them see you doing it on the phone, but keep your information secure. It really is important that the security is maintained during the process.
So far, have you come across any situations where individuals just give up on it and just go to the paper-based application because they find that that's actually easier for them to do it like that?
Yeah, so far probably 20% of my clients have gone to paper forms. Wow. And I'll give an example. I had one where they got the MyGov ID, they got into the system to do the director's ID, and then it couldn't match the ABN or the member number of the fund. They got onto the phone with the tax office, and they were saying, no, the ABN doesn't match. And my answer was, well, it's the tax office and that's providing the ABN and the TFN. So surely their system should be matching it up in the background, not up to the client to try and fix it. But that took, the client was on the phone 3 times for an hour each time and trying to get it through, even with the tax office help. In the end, they just said, maybe it would be better for you to do a paper form. So there's lots of complexity there. And as I said, with a lot of people, it's just those slight differences in names and stuff. So it's better for them to go away, go to the RMS, the driver's license registry, and get your license fixed up to match your birth cert and your passport, rather than trying to get around the system, because it's a tick box system. If things don't match, it'll just get rejected.
Yeah, so I find that concept very difficult to do. I mean, I think I mentioned last time on the Fast 5, I'm yet to do my director ID and I've got to do it. But the more difficult you make it, the less, well, you have to comply, obviously, but the more reluctant people to go through the process people will be.
Yeah, and my big fear is that it'll drive accountants or advisors to go back to advising individual trustees rather than corporate trustee. It would be a big mistake to do that. So don't take a shortcut and just set up individual trustees. And there are numerous reasons why a corporate trustee is much more effective long term, and the individual trustees can cause a lot of pain down the track if you have to change names of trustees and investments, etc.
Just another question from the audience, just on the back of the crypto currency question. Are you seeing any inquiries about NFTs? That's
Yeah, look,
the latest thing.
We've had a few inquiries about them, but from the research I can see, and from what I've gathered from the auditors that are working in that space, they just don't believe that NFTs can be seen as a proper asset for an SMSF. One, because there's some complications. A lot of the NFTs are now part of gaming, computer games and metaverse type of arrangements, where you're buying a part of like a property in a metaverse, or you're buying a tool in a game, but you're, as an SMSF trustee, you're not allowed to get a present benefit from an asset of the super fund. But also at the end of the year, how do you get a valuation on these items? Who provides the valuation for something like that? How do you track the payments on it and show where the asset is stored? The asset, an asset of a super fund, if it's deemed as a collectible, then it must be separately insured and stored away from your own personal assets. So there are so many complexities to it that my answer at the moment is NFTs, no, not in your fund. Absolutely no, until you can come answer all the questions that the auditors need to satisfy.
How good an understanding do you see trustees having of the, how can I put it, the interaction of the rules of a self-managed super fund with the sole purpose test and the investment strategy and all that sort of thing, versus here's the next best thing that I want to see whether or not I can invest in? I mean, you raise a really great point about the NFT and the gaming, the gaming association with it. I mean, how many people would even think about that? And on a broader level, make a decision intertwined with all of the other governing rules of a self-managed super fund.
Look, it's really important you don't start trying to adapt the rules to your situation. So one of the questions I got over the last couple of weeks is about fishing licenses in a self-managed super fund. So the question I got was, could they lease the fishing license back to their own business entity? Because the super fund had bought the fishing license 10 years ago, and they had been doing this. They'd never sought any other advice. And a big issue now is, after last year, suddenly we've got independent auditors on every fund. So things that were just ticked and flicked by accountants and their internal auditor for a decade have suddenly come up as an issue. A fishing license is not business real property, so it cannot be leased out to a related entity, or if it is released and it's more than 5% of the value of the fund, then you've breached the in-house assets test. So it's really important that you don't, and the person I spoke to, they had convinced themselves it was business real property. I had to I had to show them the definition of what real property was, and really argue with them, because, and the problem was their accountant had just suddenly gone quiet, because they knew they'd made a mistake. For 10 years they'd signed off on this, and suddenly when a new independent auditor came in, they said, well, you can't lease non-business real property to a related entity.
Wow.
The people who had done that strategy properly had leased it to a different third party, unrelated, and that had been fine. But once you lease it to a related party, you've breached the fund rules.
Well, Liam, there are no questions from the audience left, and we're just about out of time. So I just wanted to thank you very much for joining us and giving us some insights into not only your background, but some of the advice issues that are currently popping up in your world. So thank you very much for being on the Fast Five today.
Thank you.
And as I just alluded to, that concludes our second SMS Trustee News Fast Five session. Thank you for joining us, and we hope you enjoyed the session, and more importantly, found it a little bit useful for your own set of circumstances. Our next Fast 5 session will be held on Friday, the 10th of June, as you can see on screen now. Just remember, for practitioners who want to be a part of the Fast 5, just email us at events@bmarkmedia.com.au, as you can see on the screen right now, or you can reach us on the SMS Trustee News Facebook page via the Messenger facility. Well, that concludes today's session. Thank you very much for joining us. I really enjoyed the chat with Liam today. Thank you again for his time. And we hope you'll join us for the next Fast 5 session in a few weeks' time. Other than that, have a great day and enjoy your weekend.